focus. Ideate, innovate, enable. Mutual funds sahi hai. Give wings to your savings. In association with News 18 Network.
Hello and welcome to this special conversation. The last 18 months have been a challenging time, a challenging phase for retail investors, especially those who got their first brush with equities in the post-pandemic bull run. With markets being lackluster over the last 18 months, investors are looking for direction when it comes to wealth creation.
And we put the spotlight now on goal-based investing and help you build a corpus through investing in mutual funds the right way. This is Mutual Fund Sahi Hai, Give Wings to Your Savings in association with Network 18. And joining us today is A Balasubramanian, the chairman of AMFI and the MD and CEO of Aditya Birla Sun Life AMC.
Well, Bala, thank you so much for coming to our studios and joining Sonia and me on the show. And as she said, investing the right way. I think that's the operative word, right? Because market cycles will change, products will change. And we were just discussing this whole retail move towards the futures and options market. And data is telling us that people perhaps want options. People want, a quicker way to generate wealth, which has not been happening in the traditional sense. So your first thoughts on the retail sentiment right now? There is a fair amount of frustration now there, isn't there?
I think if you look at historically the market, whenever the market either goes through a flat period where the return is not coming or return is coming with a lot of difficulty, and then especially volatility also sets in along with that, the general trend from retail investors is actually take a backseat types. And that's what we have seen in the last almost 6 months, especially in the equity market participation point of view. And again, whenever the global market uncertainty also comes in, especially the rising interest rate scenario, the naturally equities and asset class takes the backseat compared to any other asset classes. But having said that, from a mutual fund point of view, while the equity market participation would have come down, for the mutual fund point of view, I would assume that SIP as an asset class continues to come in. So I don't think that has been any bigger issues. But this generally I see as a general trend on the retail behavior, that they're all driven by some bit of momentum, some element of positivity, some bit of buoyancy has to come. And if the buoyancy remains, of course, they tend to participate more. If the buoyancy goes down, they tend to participate less. But that's something I think one should not take it as a new trend. It's always a trend historically proven. Only the element of participation can vary from time to time.
I think it's also very interesting that whenever the markets are rising, it's easier to get participants in, right? Because everyone thinks they can make money.
Exactly.
In a volatile market is when the struggle is real. So you're talking about goal-based investing. That's what the campaign is all about. How do you get more participants into the mutual fund ambit? How do you get the fence-sitters to start investing in mutual funds, especially at a volatile time like this?
I think the way I think the industry has established itself is, for the mutual fund point of view, I would assume that SIP is the mantra that everyone will start adopting, given the fact that market is bound to be volatile. Whereas goal-based investing is something remains permanent. Our goal remains permanent. Buying a house, buying a car, getting your children educated, or maybe or buying any other luxury items or travel, you plan your overseas travel and so on and so forth, or within the India also travel you want to do. Such things remains permanent, that nothing changes. Goal for anybody for the matter, whether a 20-year-old person or a 40-year-old person, every person has got a goal. So that's why I think we believe that when you're bullish and you're convinced that investments have to be made for the longer term purpose, the market volatility should be seen as your friend. Market volatility should not be driving away from fulfilling your dream by way of investing in goal-based investing. So that's what we say, that over a period of time, rupee cost averaging works. I think the best investments are always made, or the best returns are always made when you invest through entire volatile period. If you invest in a volatile period, sometimes you will buy the stocks at a lower price, or maybe the units at a lower price, the units sometimes at a higher price. At the end of the day, if you take the average of that, you will probably stand out is better than the market average that you were given. So that's why we always believe that goal-based investing is the way investing, that remains permanent. Your dream, I am not changing it. Market volatility should not make actually the dream of any individual change. Therefore, the goal-based investing becomes the way of investing in the equity market. That's something we are remaining it. If you ask me, is there anything new in this? Absolutely no. But I think what is most important for the people who are investing in the market, keep reminding yourself all the time that investment that you are making is for the purpose, is for the goal. Therefore, don't take away the purpose and goal. The goal and purpose remain the same. Therefore, don't move away from that looking at the market dull period, volatility is there and sentiment is low and so on and so forth. That is only for the trader. The trader has to worry about the market volatility
The ups
because
and
he burns his finger. The market trend is little downward. He actually makes money. Actually, the market is buoyancy is high. Whereas from investor's point of view, it doesn't make difference. It's an opportunity, I would say.
You know, Bala, it's really interesting you mentioned that, and I completely understand why it's important to reiterate some of these things, because whenever we have discussions, whether it is, you know, our friends, family, people around, you hear investors, the discussion is always around, are you in the best performing fund or not? How much is your fund working? Aapka fund kitna acha return karta hai? I rarely see anybody discuss that this is a fund for my, you know, retirement planning needs. This is a fund for my, you know, my short-term holiday that I want to do. So how at Amphi and as an industry body, how are you planning to get people to make the switch? It's basically just connecting. We are all investing money in mutual funds, but the fact that you need to segregate your investments and map it to these goals, how do you get investors to do that?
I think it's some function of the habit. I think it has to become a habit to keep targeting the messages continuously again and again, again and again, just to ensure that he remembers the purpose, he remembers the goal that he have, that whoever has got the investment needs for the longer term. The second is the chasing the return. If you chase the return, there is a period where the chasing the return would actually make you fail. I think sometimes people believe the past return is very good, extremely good return is actually the repeat of the future return. Absolutely no. Yeah. And that's something, if somebody does market, as you have seen in the market, sometimes Sensex does better than the mid cap does better than the Sensex, or maybe the large cap. And this cycle will always keep changing. It's a question of asset allocation, it's a question of what period for is making investment, it's a question of actually that investment they are making as a pool of investment they are making to meet your longer term goals. Fulfill your dreams can always come by your diversifying your portfolio, not by chasing the return on certain segment of the market and on the basis which make your investment. That's something which keep harping all the time. At the end of the day, historically, whenever anybody has chased the return, I've always felt with some kind of disappointment. Therefore, chasing return is not to be the objective. Chasing your goal and chasing your purpose should be the objective.
We'll take a quick commercial break. On the other side of the break, we'll continue our discussion on how to grow your wealth, how to build a corpus, and if you're not investing in mutual funds just yet, how to begin your financial journey. Stay tuned.
Mutual funds sahi hai. Give wings to your savings in association with News 18 Network. Mutual funds sahi hai. Give wings to your savings in association with News 18 Network.
Welcome back to this special show, Mutual Fund Sahi Hai, Give Wings to Your Savings in association with News 18 Network. We're talking to A Balasubramanian, the MD and CEO of Aditya Birla Sun Life AMC, to talk about how mutual funds can help you in your investment journey, grow your corpus, and of course, reach all your financial goals. Bala, before the break, you were telling us about how, diversification is important in a market like this. But I want to understand from you, with this campaign, what is the main objective that you have? And how do you plan to draw in the new set of investors, the younger set, the Gen Z as we call it, right? Because there's still a lot of apprehension towards equity markets. I guess a lot of the younger generation still feels intimidated as far as investing is concerned. How do you sort of demystify it for them?
Of course, the whole company, if you look at the mutual fund SIA, we started almost about 16 years back, about 7 years back. In that period, the awareness of investing in mutual funds have gone up quite significantly. Whether it is young crowd or the middle-aged crowd or old crowd, the acceptance of mutual funds have gone up quite significantly. Now, the message that we are giving is that every citizen of the country should become the owner of the mutual fund. Irrespective of whether you will have need, not will have need, at the end of the day, everybody has got a savings. The savings pool for everyone remains. Whether it is youngsters or whether it is middle-aged people, for everybody, the savings is a must. Secondly, for youngsters, the saving should be seen as a spending. For youngsters, the spending is actually first comes a priority. For him, because at the age of 23, if I start planning for a retirement, that means I think he is thinking actually too far from a retirement point of view. He has to first think about getting settled in his career and first to complete your studies, educations, then get into the work life, then get married, then other needs comes in. Initial period, the large component of your savings will go towards spending. While of course spending your money, you are within your right to spend your money. Some of your spending which otherwise you will spend and say buying a pizza and other things, then you actually assume like that you have spent that money. Don't think actually you are savings, don't think you are investing. Put it as part of the spending, you convert it into savings. and then look at actual power of compounding of this for your longer term point of view. That's where one should begin. As you start seeing the real effect of that saving that he has done, or maybe the spending has converted into savings, and then see the effect of that is seeing actually in his portfolio, automatically his interest levels will go up. Then you will understand the real investment need that he has to make, or he or she has to make for the longer term purpose that should come. I think that's what I think we are trying to drive. For everyone, savings pool is there. For everyone, saving the money saving that they have, investing in appropriate manner is a must. The question is how much you want to save, how much you want to spend, and that can vary from people to people depending upon the need that they may have. But every Gen Z youngsters have to also convert some of their spending as a savings in order to one understands and also actually experience it and also build it for the longer term purpose.
Okay, I think that's great advice for the younger generation. A lot of these younger investors, even maybe middle-aged investors, basically people are coming through the online channels. So how will you take this on board, the Wings to Your Savings campaign?
I think we are, of course, giving a lot of emphasis on the digital platform. As you rightly said, youngsters' accessibility, usage of digital platform is far higher than any other platform. So the money that I think will be spent will be equally high when it comes to the question of promoting this product, especially on digital platform, to attract investors from the younger crowd to make them invest in mutual funds. I think that will become one of the way of investing. And second is the messaging. I think messaging has to be reasonably appealing for them, as I mentioned earlier. At the end of the day, he has to get the right message for his investment needs that he has to create. Therefore, the messaging will also be equally high. And last but not the least, today we are as an AMFI, as a body under the mutual fund here. We do, of course, participate in various sports event by way of sponsorship. Again, the messaging is actually to the people who are the young in nature have to, of course, increase their understanding. While, of course, you are also watching your entertainment program or maybe watching something else at the same time. Also, just plug these things actually for him to get some kind of mind recall. So I think that's something we are doing it very effectively.
Let me just ask you, since we're talking about young investors and we're talking about how you will reach them, tell us also what they're telling you. Over the last, let's say, a couple of years, 2-3 years, AMFI would be collecting, a lot of data on the younger profile, let's say 21 to 25 up to 28. What is this class of investors telling you? What do you think they need? What are they looking out for? They have a lot of access to information. They're looking at markets across the board. So what are the trends you've picked out?
See, one of the things which, of course, definitely changed the curiosity. Curiosity investor has gone up quite substantially the last few years. Maybe we can say that post-pandemic, equity market ran up quite a lot. Therefore, people realized investing in equity became important. At the same time, crash in the equity market also made them realize that investing in the mutual fund actually is a better option actually for me to invest rather than going through the...
Rather than buying bitcoins?
rather than buying put and call and investing in the fund market. There also people have realized it. The who have realized is actually the youngsters. Because the youngsters are the one actually who have actually tried their luck because they have the ability to actually take risks for themselves. But trying the luck in the equity market, that's something as a shift. Therefore, the curiosity investing in mutual funds have gone up quite significantly the last few years. Okay. Second is the cost of living has also been rising. I think every individual have got today an aspiration. Initial people thought that people will be hesitant to buy a house. Now people actually will work from home and has become a new order. Therefore, they will rent a house and basis which they will live their life. They're also now gradually changing. People are moving in from renting a house to the owning a house. And people are actually now coming back to the owning a car versus renting a car or maybe using only Ola and Uber. That initially there was actually a huge feeling that people will actually not buy a car. But I think if you look at the trend, the car ownership was increasing. But where is the money for that? You need, of course, save for that. Therefore, that curiosity is something which has come, and realization also has come. Therefore, to meet my longer term needs,
I need to plan and to grow
I must invest wisely.
So that's fair. I get that point that, people have now understood that to beat inflation, to meet their goals, they need to invest. But, there's one problem, right? A lot of these new investors who've come in post-2008, post-2010 have not seen a large correction. So there is this hesitation as well. The minute the market starts to correct, people either start to either stop their SIPs or pull out from the market at a very wrong time when the market is falling. How do you address that issue? How do you keep it going? So the goal, of course, as you were mentioning earlier as well, if you stay invested in a 10-year period, it's perhaps in that 1 year or 6 months where you will actually generate alpha. How do you ensure that investors stay invested?
I think clearly the constant messaging make them understand the power of compounding. and make them understand the purpose for which investing is for the longer term, not for actually taking out the money in the short term. Given the past success, there are many instances where in post-2008 crisis, people actually, even the mature investors actually withdrew and suddenly they realized the market rallied. That is the time they realized, where is my SAP is gone, where is my investment is gone. Because they themselves have withdrawn it, therefore the answer is with them only. That realization definitely is there. Second, of course, as far as the mutual fund investing concerns, is we keep advocating all the time. SIP is the only one which has the rupee cost averaging. Irrespective of the market, when the market falls, you actually buy cheap. The market goes up, of course, you buy a little costly as well. But given the fact that you keep buying, that behavior remains all the time, buying and buying and buying, investing remains permanent to the SIP on a month-on-month basis. Therefore, that gives them benefit. And most of the time, if you look at somebody invested in SIP, throughout the period, the market volatility, they would have made more money than the people actually withdrawn and started the SIP investing in the rising equity market. A lot of people have withdrawn. They would have come back also after leaving a gap. But such kind of people experience actually is poorer than the people actually who stayed invested for long term. These are some of the analyses that we have done. And we keep actually giving this as a message at the end of the day, from investors' point of view, that making them realize the purpose of long-term investing for which is coming is most important than the market return that provides. But as you rightly said, in one good market, it gives you all the return that you would not have got in the last 5 years period.
So you just have to be patient and make sure you're there when that big rise happens, right?
Exactly.
Bala, before we sort of sign out, I have one more thought. Over the last couple of years, ever since you had the mutual fund Sahi Hai campaign, I mean, mutual funds kind of got synonymous with equity in this country. It's only over the last 1-2 years when debt became a very viable option. People were really looking at debt mutual funds. There was a lot of product innovation. People started understanding some of these passive products that the industry was putting out. And then we've got the spanner in the works, right? The tax issue that kind of happened. So as you go forward, how is the industry looking to sort of rise above that? Will mutual funds be able to provide a good option, a good solution to retail investors, even on the debt side, where retail is still a very small, very meager sort of participant in the overall scheme of things?
I think if you look at the mutual fund product offering, that one has brought in all kind of funds that can suit the investors' needs, whether it's equity, whether it's the fixed income or the hybrid funds. All the three asset classes, including gold and silver and ETF and index funds. All the categories have now come for investors to choose. Therefore, mutual fund have always been innovative in giving a variety of products for investors to choose. Of course, one can argue there are too many products actually which one to choose and so on and so forth. The argument will always be there. Will never stop, because anyway, if I give so much, actually people always have some crib actually that too much is there and so on and so forth. The understanding issue will always be there. But the fact of the matter is, one, the product profile that we are giving is very, very high. Mutual fund, it gives you capital gain rather than income generation as well as fixed income concerns. Therefore, if you look at the whole proportion of the mutual funds, equity gives a power of compounding for long term with a substantial higher return than the fixed income. Fixed income does give you compounding doesn't change, but its lower return will come because at the end of the day, it will be linked to the more or less the prevailing interest rates at each point of time. Then you have hybrid funds, it comes in between, captures the momentum that is there in fixed income, also captures the momentum that is there in equity. That's the mix that comes. I think if you look at it from that angle, definitely one would have enough choices. And taxation is only one component which of course decides. A component of tax is not the alpha generator. I think if you remember, the alpha generated on both on fixed income and equity are the selection of securities.
The money management.
The money management.
The way the market is going, there's that TINA factor as well, right? There is no alternative except investing in equities, and that's the place to be and perhaps grow your wealth. Thanks a lot, Bala, for joining in and speaking to CNBC TV 18.
Thank you. Thank you. My pleasure.
Well, with that, it is a wrap on this special edition. Thanks a lot for watching. Have a great day.
Mutual funds Sahi Hai. Give wings to your savings. In association with News 18 Network. Focus. Ideate. Innovate. Enable.